Hello, everyone, and a very warm welcome to today's cryptocurrencies update for March the 4th, 2023. Thank you so much for your patience and understanding while I was on a medical leave on Thursday and recovering on Friday, and have gone through a plethora of charts for the cryptos, major markets, and golds and miners. So it is time to see how things are progressing, and they are progressing quite nicely, with maybe some deeper downside than initially anticipated. But remember, in bear markets, the upside disappoints and the downside surprises. In bull markets, it's the other way around. So always check my charts for target zones. I might not necessarily write it all out. They're clearly spelled out on the charts. Cardano, we always said it must break below 32 cents to confirm the wave 4 top, and then the wave 5 down to ideally around 15 cents. And we knew that below 34 cents, it was already a serious warning for the bulls, and it is nicely on track to do exactly these things. So I see no reason to change my tune on this one. Avalanche working nicely as well. It reached the green wave B target zone a couple of weeks ago, and wave C has been confirmed last week, right on track. Binance Coin working nicely. It reached the gray B wave target zone, and it should now be in its gray wave C, nicely on track to complete a second wave. Bitcoin, it can still try for a wave 1-2 setup, but please remember that the break below last week's low has now increased the odds it is in this bigger pullback. Curve, the impulse up completed. The initiation move is likely complete, and the wave B counter trend rally is also likely complete. It's rather shallow, expected a little bit more, but beggars can be choosers in a bear market because upside disappoints. And wave C of this larger wave 2/B should now be underway. The alternative is that we're still only in wave A, and we haven't seen wave B or wave C yet. The wave A is simply getting deeper than what a standard textbook should do. Ethereum is similar to Bitcoin, can still try for a 1-2 setup. I have no confirmation for it whatsoever. But since we broke below last week's low on Ethereum, it does increase the odds that just larger pullback is underway. Link has failed at its 200-day moving average, and as said, below the 200-day moving average and below the cloud really increases the odds that we're going to see the $5s again for a fifth wave before we start the bull run. Matic failed to bounce. That means that wave A of wave 2 is still underway. See the curve, upside disappoints in bear markets. Corrections are bear markets on any time frame. It doesn't have to be years, it can also be minutes, and upside disappoints. And the alternative is that February high was the top of a much larger bounce, and we're going to go all the way to the 20 cents. This is why we don't chase. This is why we don't hold. This is why we have appropriate stops in place. All right? We have to always recognize the potential that's in the chart to prevent disaster and havoc to our portfolio. That's all we need to do. Doesn't mean we have to be wrong or right. We need to make sure we don't lose too much money. Solana, the fifth wave top is more and more likely. Only about 85 cents shy of its ideal target zone, so I'm good with it. As we continue lower, it is more and more likely the larger wave 2 to around $17 plus or minus 2 is underway. So let's have a look at the charts. Please read these slides. Please remember, we'll follow the scientific evidence. If the evidence changes, we change accordingly. We can only work with the current data at hand. And based on what we know on the Elliott wave pattern, we then set out the most likely course. And when the market decides to change that, then we change course accordingly. Very, very simple. Just because we want to sail to the North Pole doesn't mean we're going to go in a straight line. The weather will most likely throw curveballs at us. Ice sheets, storms, waves, change the wind direction, you name it, no wind, whatever it is, if we go on a sailing boat. And we have to adapt our course accordingly. There's no difference, right? No difference. These are all the patterns we need to be cognizant of. Please review if necessary. These are all the ways you can use me to your advantage. Please do so if so desired. This is the bigger picture wave count. All good. Shorter term, look at Cardano. As soon as it filled its 200-day and 50-day moving average, weakness. Above it is strength, below it, weakness. You can see the difference in chart setup here in January versus where we are now. Okay, this is a different environment, and it looks like we're going to fill the cloud, and then we're going to see where we're going to end up. Ideally to about 15 cents plus or minus 5 cents. That is the ideal target zone for this wave 5 of 5. And then our new bull run will start. Here we have avalanche. Early February, we're looking for the A low, a B wave high, and a C wave nicely underway, anywhere between $13 and $16, and we're now at $16 already. I have no reason to tell you that the downside is complete. No signs whatsoever, so we continue to look lower for this B/2. Binance coin, look at this. Please forget this long wig here. This is a printing error. We bottomed here for wave A. This is the low, as you can see on my cursor, right at the 50-day moving average. We bounce right in the B wave target zone, the upper end, as you can see. And now in this wave C, down to about 260 plus or minus 10. Getting close, getting awfully oversold on some of these technical indicators, as you can see. And that is often a good sign that we're starting to bottom. Right at the 200-day moving average, again, 260 plus or minus 20 is the ideal wave C of 2 targets. Not there yet. I have not even seen a sign of reversal. Bitcoin. So last week, we had a nice potential 1-2 setup in place. And if I would zoom in, as I think I showed you on the hourly chart, we even had a nice 5 waves up. So this was then potential wave 2. And then we had 5 waves up, 1, 2, 3, 4, 5, ABC lower. That would be then 1 of green wave 3. And it failed. It failed miserably. And now we've broken below this low and we're below the 50-day moving average. So although we haven't fully retraced the rally since the February 13 low into the high, we haven't fully retraced it. This starts to increase the odds it's not going to happen. We need to see a break back above last week's high to give some of the benefit back to the bulls. Don't see it yet. So now we must be cognizant of the fact that we only got a C wave for 1 day. That's all there is to it. Remember, upside disappoints in bear markets. And then wave C is right there. It fell a little bit shy of the ideal wave B target zone. And we're now dropping lower. So we can now start to make some nice projections for this C wave. So then this is wave A. We topped here for wave B, there, C of B, as you can see. And now we have here the C wave target zone right there. Okay. Anywhere, I would say between 21,500 and 20,000. Very nice. And this will trigger, of course, below 21,395, the red 4 low. That is the ultimate line in descent because that's support. We go below it and we're going to target as look into this target zone, which we can now narrow down. So I'm going to also do that for this one here. So just make sure we got it a little bit better there. And then we can target this. Okay, so I'm going to make it a little bit lower there. That is now our next target zone. I need to see a break higher to suggest wave 3 is underway. Don't see it yet. Okay, I don't see it. I have no confirmation that is the case. Alternatively, this is a large first wave second. So this is the most bearish alternative we have. And this is why we put puts instead of stops in place. As I said last week, if you desire to go long this, then please place your stops at the lows because there is potential to go all the way down to 10,000. You don't want to sit through it. You rather take a small loss. If you're not willing to sit through or take a 10% loss on your chin, you should be prepared to sit on a 90% loss and get very sweaty. So we always have to recognize the potential that is in the chart. In this case, it's a bearish potential for this one. There is a bearish potential for this one. So why sit through this? Because remember the importance of stop losses and what it does to your account if you adhere to the stop loss. okay, versus those that don't. Those that don't think they're the hero eventually when they break even, and you have, by adhering to a stop loss, doubled your money. Even by taking a little loss on the chin. The loss is most likely tax deductible as well. There, double whammy. Never ever forget it. It's the most important thing in trading. Curve was last week's high, all of this wave B. It's very possible. Okay, it's very possible. Definitely disappointing. We didn't even reach the $1.80, which is kind of resistance. And now wave C potentially. So we have to have an open mind and consider that wave B fell a little bit short. You don't want to bet on B waves, by the way, for trading. That's not where the money is, so to say. And then wave C can now be underway and go as low as here. It doesn't have to be C's A, but it wouldn't surprise me. Of course, we have strong support at this level here, right? This is now support. At around the, and it's more like a support zone at around 72.5 cents to about 75 cents, which is nicely and closely to the 61.8% retrace, as you can see right there, right? Not too shabby, not too shabby. There, right there. So it is entirely possible that we have already topped for this wave B. Alternatively, we're still in wave A and will bounce soon. It fall a little bit short of that wave target. I see no signs of a reversal whatsoever. That will require now, of course, a break back above this level. This is now, of course, resistance. But other than that, we did a nice 5 waves up, and we're now in a 3-wave decline. A bit of a holding pattern. We need to figure out how this 3-wave decline is going to develop. Ethereum is in the same boat as Bitcoin. It can still do the 1, 2, 3, 4, 5 setup as shown, because we're not broken below the February low. That is our line in the sand. But we've broken below last week's low, which was a clear ABC higher, corrective. So this could be all of wave 2 still, where we need to see at least a break above last week's high, and then of course a break above 1750 to confirm this path. And I have no signs in place that is the case. If we break below support here at 1565, as you can see on a closing basis, it's holding, we can ratchet all the way down to 1250, 1400 for this wave 2, and then 3, 4, and 5. From a long-term perspective, this is the most bullish wave count. From a long-term perspective, this is a bearish wave count, because then we're going to complete a wave 4, and then we get a large wave 5. Please keep it in mind. So this is longer-term bearish, because then we have a nice A, B, C setup in place for a large 4th wave. And for Bitcoin, we can already have completed wave 4, doesn't necessarily have to. We can have a similar path as well, where we might complete a larger 4th wave. I don't have it on the chart just yet, but this would not be as bullish. So a breakout is required above the February highs to trigger this path. And of course, a breakdown below the February highs. That's where we're in holding pattern for Ethereum. Very simple. Link, it was holding its 50-day and 200-day moving average nicely. We definitely had a false breakout above 750. That's why we always have stops in place and raise those stops, because there can always be false breakouts. No guarantees. And it starts to look like A, B, and C for this larger wave 4 is more likely, because this is not looking too good yet for Link. So I don't have yet a good high confidence setup in place for this one. Maytech continues to move lower. I would have liked it to bottom here at around 115 plus or minus 5 cents. Okay, we're at 108 right now. So this can still be wave, or this is still wave A. Sorry, this is still wave A, a little bit deeper than expected. So then we should also expect wave B to be less high than originally anticipated. And then a wave C, which might go even deeper. Okay, somewhere around there. So this still looks like the anticipated B wave did not happen, and we're still in wave A, B, and C. And please be aware that this has still the wave label A, B, C on the chart, okay? We don't have full confirmation yet, but this is the start of a new bull run. It is the preferred path because we have 5s up, 3 down, 5s up. So we have to then treat this as a low risk buying opportunity. Low risk, meaning that the risk is we're going to go to 20 cents, potentially even 10 cents for this larger wave 4. And then all we got was an A, B, C higher. Okay. It remains on the chart. The preferred path is 1, 2, 1, 2 because of the impulses higher. But please remember, this is still on the chart. So that's why we have stops. That's why we don't chase. And that's why we anticipate and we wait for a lower risk buying opportunity. Okay, so if we get into this target zone for the wave 2, that's the low risk buying opportunity. And then we can define very nice stop loss levels in case this puppy wants to move all the way down to 10 cents for all I care. And that's, of course, not what we want to sit through. So that's what we do. And that's why we use the Elliott wave, because it prevents havoc to your hard-earned money. And if you're so careless about your money, then you deserve, of course, in my humble opinion, to sit through such losses. But it's just not fun. And that's why you signed up for me, to make sure that's not going to happen. Trading is fun. Investing is fun. It really is. And there's simply times when we have to acknowledge that it's just not working. And then we step aside. So here is Solana. I still like the wave count. Looks good here. Looks good here for this green wave 2. I see no reason to change my tune. Below this first warning level here at $20, and we're going to ratchet it to the second and the third one consecutively. So it looks good. We're almost getting closer to this ideal wave 2 target. So, all right. So that is really all I have for today. Everything is pretty much rather well on track. There is still bullish potential for Bitcoin and Ethereum. Ethereum, that would be a nice coin. Bitcoin and Ethereum, but I don't see it yet. It requires at the minimum a breakout above last week's high. Haven't seen it yet. Instead, we continue now to make lower lows and lower highs, which is bearish. So I prefer to look lower. Most of these altcoins are tracking along very nicely as well. Cardano, Avalanche, Binance Coin, and Solana. Matic even failed to reach its bounce target zone, but everything is tracking lower, which has been the primary point of view. So that's good. And I haven't seen the breakouts yet for Bitcoin and Ethereum. So the primary view remains now to go lower. That's all I have for today. Thank you so much for listening. Thank you so much for being a valid premium member. If you have any questions, contact me. Take care, trade safe. See you all next week. Bye.